Hey Honest community, before we dive into this episode, we've got a quick free favour to ask. If you enjoyed the Honest Property podcast, please hit like, follow and subscribe wherever you're listening from. It helps us grow, reach more people and bring on guests that you want to hear from. Thanks for being a part of this. We appreciate you more than you know.
Hello and welcome to the Honest Property podcast with your host Becky and Ruth. And we are sisters who built a multi-million pound property portfolio over the last 12 years. And we like to talk about building wealth, purpose and freedom that actually feels good. And today we want to talk a lot about, it's a question that gets brought up a lot by people who are beginning their wealth building journey, especially in the property space. And it's whether to do they start small? Do you start small or do you need to think bigger? It's, well, for us, I would say we were taught that it's better to start small, but then we've had this conversation and we've listened to other people talk about how, depending on where you are in your life, should you be starting at a larger scale size property investment than starting on what they consider an easy buy-to-let?
So here we wrote down some of the questions we hear a lot of the time. One thing people keep asking is, I'm renting and I want to start investing, but I've never bought a property before. Another question a lot of people ask is it unrealistic to want my first place to actually make money? I think that question comes a lot from a lot of people, their first investment is usually their home, which doesn't often make you money. The next question a lot of people ask is, do I buy a flat, a house, a small multi-let, or wait until I can do something bigger, something like a commercial to residential or something like that? Or the last main question a lot of people ask is, am I better off starting small or am I just scared of committing? And a lot of these feelings and emotions, so we felt these emotions ourselves.
Yeah.
And we had to wade through and educate ourselves to figure it all out.
And I think as well for us, we needed a lot of hand holding when it came to even buying the first property was quite scary.
Yeah. And it's all coming from a place of wanting to make your first move, and not just be stuck in a loop of scouring the internet and just keep researching and never actually taking action.
Because you're waiting for the bigger opportunity. But then you could be 5 years down the line and still not have invested in anything either.
Yeah, that's worse. Or you're worried that your first purchase is going to box you in. So say you decided to go for a way bigger project. You want to know that it was the right move. So then you're stuck to that project because you went all in. You don't want to look back in 5 years and think I should have done that differently. Because it is a lot of money on the line. And you don't want to feel like everyone else is either starting with nothing or somehow like you're seeing everyone else starting with something and somehow just skip straight to doing something massive, because that's just what you're seeing online.
So we're not talking, this episode is not talking about which is the best strategy at all. We just want to, you have to pick a strategy that fits the life that you want to live. We're just talking about the pros and cons really of starting small or starting at a larger scale when it comes to property investing and what that could mean or look like for you.
So the market changes and evolves over time, and so must you. We started with a strategy called BRRR, which is buy, rent, refurbish, refinance. And at the time, interest rates were really low. And the profitability of this strategy was it was easier to be rewarding really fast.
Mm.
We're so glad we started when we did. But what am I trying to say? So in our education, Bruce already mentioned, it's better to they advised us it's better to have lots of smaller things and sort of build a foundation of dependable small
Cookie,
projects.
call it the cookie cutter method, which
Yeah,
is by I wish I could have so you could see on a diagram, but it's basically having because easier investments like your small little family lets, and then once you've got a good grounded amount,
good foundation.
good foundation, then go to the next harder strategy. So it means that if anything was ever to happen with the next level you wanted to say unlock, then there's always you have an exit strategy of, oh, can I sell one of my foundations to help with this next level of unlocking, or if yeah, you've always got to think of your exit strategies. So if you do not have the
Stable.
stable foundation of multiple properties underneath before going to a harder strategy, then your whole ecosystem in property investment ecosystem could collapse.
So that's what we were advised. And we did do that. Actually, no, we didn't. Yeah, we did.
We
We
did,
did.
we did.
We did buy to lets, HMOs, which is basically an HMO is a multi-let house. So you will let the rooms to several different individuals.
I would argue though, because there's a lot of people that do go straight into HMOs.
Yeah,
We did do that.
we did.
We did do that, but it is advanced because we were early 20s or young,
We
and
had the capacity.
we had the capacity and we had the time
And energy.
and energy to be able to take a lot of it hands on.
And I also think when you're younger, you are more risk averse
Yeah.
naturally. As you get older, I think you reach a place in your 30s, and I think a lot of people who are in their 30s can relate to this, is you probably worked like if you are as entrepreneurially minded as we were, you threw all your energy into lots of different projects and avenues by the time you hit your 30s, and you perhaps begin a family, you want to, or you're just tired now, you just want to settle down.
You want to make your life, the systems and processes a lot easier to manage.
So your peace becomes your priority and becomes priceless. But then again, if you were, say, already around retired age and you started your journey now, perhaps you want a quick return. You've got enough life experience to feel like it's not too risky because of all your life experience, even if it hasn't specifically been in property, you've probably had experiences within the industry to some capacity to understand how maybe project management works, but you want to retire sooner than later.
Yeah.
So you're gonna, or maybe you have more capital to put down at this point.
That's a big factor. I will say that we did go to a business property event a while back, and this was a good point that was made, which another property investor who mentioned, if you are a lot later on in your years, you don't have time on your hands anymore. So your retirement figure is not going to be having multiple buy-to-lets and investing, say, at 60, and you want to retire by 65, having just only buying multiple buy-to-lets is not going to get you to your retirement fire number very quickly. So why wouldn't you take on the more riskier strategies to get what you want quicker? But I would still argue that if you have no experience at all, or you're your JVing, which is joint venturing with someone else to do the work, and you are the angel investor, wouldn't you say? I don't completely agree with what that investor had said.
I think you need an easy exit strategy.
Yeah.
You would have to be able to easily get out of it. But then that still applies to everything, every kind of investment that you do.
Most brokers specialize in residential mortgages, which is not what actual property investors need. So when you need bridging finance or specialized buy-to-let mortgage, you're explaining your strategy to someone who's never done a deal themselves.
That's why we work with Scale Property Finance. They're specialists in bridging finance, actual property investors who've borrowed from these lenders themselves. They know exactly which lenders work best for investors because they've been in your shoes.
Simple, fast, flexible finance when you need it. If you're looking for a broker who actually understands property investing, then check out scalepropertyfinance.co.uk.
Tell them we sent you and they'll knock £100 off your brokerage fee. But yeah, the market changes. So just to reiterate, the same strategy there is no best strategy that applies to everybody. Investing is such a personal decision. It depends on your time capacity, how much money you've got to work with immediately. There are obviously ways of achieving finance. And it also depends on what the market's doing at the time, like interests change. Maybe you need to look further afield. Perhaps your locality isn't the one. Maybe your country isn't the best place to invest. Yeah. So you really need to think, and also what you want your life to look like could look so different to what the next like big property guru person's life actually they're portraying it looks like online. So you've got to go through a filtering process, go through a decision matrix, which we can talk about later, how you come to that, because that is such a crucial point that people just skip over. And it's pointless trying to build something that doesn't align with the life that you plan for yourself. But yes, you also just don't want your mistakes to feel more expensive, because they will feel more expensive than they used to before. Yeah, all those lower rates before, fortunately, when we began, they were able to smooth over any mistakes that we made. But yes, every choice will feel like it matters more. But like I said, we learned lessons. We learned so many lessons from what we did. We educated ourselves, but you will never.
And this is also going to be very cliche, is that, yes, we had time on our hands, so we were able to learn all of those skills and learn so much along the way. But that was more valuable. The most valuable thing was learning all of those mistakes to get to a point where we're now in our 30s to go, okay, now we know exactly what kind of strategy really suits our needs.
Yeah. And your first property will not solve everything. It will teach you everything, which is why, personally, I think we would advocate, if you were going to go either way, we would lean towards starting with something small, because it's just a lot of it is based on scale
and practical skills.
Yeah, so the issues you'll have with a regular buy-to-let can be easily transferable to another type of strategy or project that is bigger in scale. Maybe there'll be a couple other extra bits you need to be aware of, like regulation and
there are
formalities like that, but essentially the moving parts will roughly be the same. So it's knowing, managing tenants, sourcing tenants, project managing, of refurbishment. All these things will be transferable.
Yeah, there are people that we know who've been in property for a long time, and they started with one buy-to-let, and it was a single let flat, and then went straight into HMOs. And they've got to a point where they are now going, oh no, just keep it simple and go back to buy-to-let, because but they had that first experience first before building into higher strategies. So that says a lot already, is that they already had that experience with a lower strategy.
Also, I want to point out that it is so easily to get emotionally caught up at the end of the day, this is a business. Like it's hard, like you are creating a roof over somebody's head. Maybe it is you are using the roof over your own head as well as part of your investing strategy. But you need to also separate the emotion from the business decision. This is likely, if it is something you're living in right now, it's likely not your forever home.
Mm.
It's not going, it might not even be your final strategy. You're going to try
New.
first. We've tried several to come to the conclusion that we have with what our actual strategy is. And thing is, it might change again.
It might change in like 5 years'
We might
time.
do a different strategy again when we've found we want more to do later. And focus on it being a learning step. Obviously, you want to minimize the cost of this learning step as much as possible, but I want to just gently reframe what your first project should be. Or I don't like the word should, but what your first project ought to mean for you without you overthinking it too much.
So what does starting small really mean? It means not jumping into something like a service accommodation.
So service accommodation is like Airbnbs, like
Yeah.
acquiring loads of Airbnbs.
So it could be buying a flat or a small, which would be a single let for a couple or a small house that is for renting to a family. Or even it might be renting your own home with consent to let the other bedrooms so that you're living in there. You're living in the house, but you're running it as a HMO. That's also another like simpler form because you're already in there.
I think Americans call it house hacking.
Yeah.
Basically, you're living in it, you might be profiting it from it because you've rented the other rooms in your own house and you're benefiting from the growing value of your house without having your home, which is the case for most people, be a liability.
Yeah, but this is something that is simple. So you can do this learn on the job whilst you're working your day job. So
Yeah,
it makes,
managing tenants,
yeah,
managing the repairs in your own
yeah.
house.
And we were, before we started this podcast episode, we were saying a lot of it is trying to run before you can walk. So learning on the go slowly and building up your confidence is a lot better than trying to jump straight in and having to rely on someone else's knowledge to
Make those
take bigger risks.
Yeah, those big decisions and big costly payments for you. When you start small, another benefit is smaller deposit. There's fewer moving parts. If you say, for example, you decided to buy a portfolio of somebody, you're suddenly in the deep end addressing so many problems
multiple tenants
at the same time.
that you
can learn the basics quickly. And if something goes wrong, it's usually manageable. Obviously, the downside is the cash flow will be tight at the beginning, but you're starting, like, give yourself a break. You've got to start somewhere.
And also accept that you're not going to be perfect landlord, that
A human.
you're human and humans make error and it takes time. You can't rush time. It takes time to have learn all these systems.
Yeah. Progress can feel slow. It'll be a few months before you feel like ready to maybe take the next step or save enough to take the next step.
And if knowledge and gaining knowledge on how to do all of this is important to you, then you're probably going to be really hands-on because we
Oh,
were.
yeah, we were. It saves a lot of money. It saves a lot of costs, but it also gives you a good idea of what's like quality and standard you're after if you're going to hire somebody else to do work for you. Obviously, we're not plumbers or electricians, but it's a great way to save costs as you're building.
And it's a great way to gauge pricing in real time and know that you're not going to get ripped off.
It can feel boring compared to what you see online. Maybe you're not doing a glamorous mansion development, but what you're doing is still so valuable, and that person who's doing the massive development also started where you started. So this way really suits people who are still building their income. You're juggling work, your freelance life, your family life, And people who don't want their property business to take over absolutely everything just yet. Usually it's like a slow switch. It's for most people, for a lot of people, it's a way to achieve their financially independent retire early number or work optional number, but it doesn't happen overnight. It's a slow transition, which is far more sustainable in the long term, rather than be like, go all in. Like it's you could, but in terms of sustainability, it's better risk management depending on where you're at in life. So if you did want to go bigger, then maybe you can. It usually involves having a larger deposit.
Yeah. More borrowing, more paperwork, more responsibility that can feel really overwhelming if you do not have any knowledge or education or understanding of property investing in the first place to get thrown into the deep end. By the way, I'm not trying to say don't do it. This is just what I'm thinking out loud is.
Before we continue, here's a quick thought. Ever feel like there's just never enough time to focus on what really matters in your business? You don't have to do it all alone. As they say, a great team makes everything easier. That's why we've partnered with the Freedom Geek. Their talented Filipino VAs help us with tasks like admin and podcast editing, just like for this episode, giving us the freedom to focus on what really moves the needle. If you're looking to reclaim your time and to work smarter, then check out the Freedom Geek. All the details are in the show notes. Now let's get back to our conversation.
I can imagine if I had started on a bigger project and I didn't have those practical skills that built up over time, I could find it personally quite overwhelming. But there's a lot of pressure when it doesn't go to plan. Like if you don't have multiple properties that can back that massive project, if it went wrong, it's quite scary.
And I mean, there's a lot of reasons why people go down this route. It's better numbers on paper, potentially stronger cash flow, and it feels like you're doing it properly. I think there is an image in a lot of people's heads when you hear the word property investor, you think immediately they've made it. Immediately they've got
like a property investor is suddenly a tycoon.
Yeah. Suddenly overnight a tycoon.
He's like living in Bali or Dubai, and like that took years for them to even get to that point. No one skips. No, we were saying this morning at the gym, like no one skips to that lifestyle without putting the hard work in the beginning.
Yeah. But let's be clear about the risks. It can be harder to finance the first deal. Your mistakes will be way less forgiving. One issue can have a way bigger impact. Yeah, going bigger first can work, but only if you are genuinely ready for it. So I think the real question that is on a lot of people's minds is what path fits you right now? And
like be really, really clear and honest with yourself of where you are. Like, is your income right now stable enough? Would the mistakes of going bigger actually knock you back many years? Or does it help you learn? Do you actually have any time on your plate to be able to even focus on property investing in general as well, not even just small or big? Do you have the capacity to be able to even give it your time?
I think you mean like depending on the strategy, right?
Yeah.
So like, for example, a standard family buy-to-let, from our experience, you rarely
it's more
hear from
stable,
them.
less time output. Is that right? And then if you're doing something that's like a HMO, roomlet
or
Airbnb, that takes a lot more time and management. So think about what is this really suitable at this time in your life?
Yeah. Because if you are self-managing those types of property strategies, it is essentially like another job.
It is another job.
It is.
People leave their own jobs to go into that kind of strategy to replace their job. So just really
Is that the
think
job
about,
you want?
yeah, is that the job
Could
you
be.
want?
Are you trying to skip a step, or are you just avoiding discomfort? So I think a lot of people, there are many people who approach property investing with a lot of ego. And
Sorry, I have to roll my eyes. Sorry.
and we just want to reiterate, it's not about, like, be brave, but it isn't about your ego. It's about timing. And most people don't fail because they started small. It's quite the opposite. They struggle because they chose something that didn't fit their life at that stage, or consider whether it will still fit their life
Like 10 years down the line.
like 10 years later.
There's also, do you need experience or can you leverage right now?
Yeah, there'll be some people who have no time, but they have the money. You could pay somebody else to invest on your behalf. You could, there are so many ways to invest, but in terms of trying to do it yourself and have full control yourself, really consider what resources you have available to you. What would we think about our first investments right now? Like we said, we started with HMOs because we were 20, we had the energy, we had the time.
We were building
We wanted the cash, we were hungry for the cash now. Did it work? Yes.
Would we do it again?
Yes.
Yes.
I don't regret anything we've done, but the difference is we learned to adapt with as time went on, because we've been doing this for more than a decade now, and the market's changed and our priorities have changed. And as first investments, they were small multi-lets, they weren't massive. They were probably like, actually, I suppose 13 rooms was actually a lot of people, but
we had time.
We had time to do it. But if we started with that now, no, I would not do that.
No, in our 30s, no.
So yeah, factoring in where we were at the time, yes.
By the way, just saying this is based on our life. This is like you could be 30 and have like loads of time.
Yeah.
But this just for us in our life right now, yeah, our priorities have just switched, which means that having trying to grow simpler is our motive.
What would you do differently with hindsight, do you think?
I wouldn't do anything differently.
I think
I wouldn't, because I'm so grateful for everything we learnt, because we have been hands-on, and it only took into our like later 20s, 30s, where we actually, our systems got better.
Yeah.
To give us back more time. I think the thing that we said this in previous episodes where we went into a strategy that was a bit of a shiny penny one, but I actually now think back, starting this year in 2026, look back and go, actually, I am really grateful that we did do it, because it was a quick way to learn how we did not want to. Like it made us remember that adapting and pivoting and remembering that we're no longer our early 20s, that our investing strategy is allowed to change.
Yes, that's true.
And
I do wish that there was someone else out there when the strategies like this.
Yeah.
We're talking about rent-to-rent strategy, which is where you get consent, legal consent from the owner of a property. We were waiting for a refinance.
For context, we're waiting for a refinance and we got bored and impatient.
So we're like, how do we keep ourselves busy whilst we're waiting for a refinance?
I know, start a new business.
Start a new business. So we started rent-to-rent, which was a new trending strategy at the time, which essentially means you have legal consent from a landlord to rent their property out. on a lease agreement as a company, so you can operate the property either as an Airbnb, usually as an Airbnb or as an HMO. An HMO is a house that multiple people can stay in. So that's usually what people do. But there was nobody at the time, I think, because it was new and we jumped in head first with like zero risk aversion into something that I wish somebody had said to us. There was just more warnings about it. We had a very positive attitude at the time, and it served us well. But also we've had our lessons with whether or not that was even a strategy that was the right fit for us.
The lesson that was learned was that it didn't fit our energy management.
No.
Is that right? Yeah.
So that is something differently with hindsight. I wish, because we got about six of them within a year? I wish we didn't get that as many.
I wish we just learned from less.
Because once you start something, it takes a lot to undo. But on the flip side, momentum often beats just waiting around. Maybe we would have done that anyway, and then
I think so. I think we
over a longer period of time to
realize that.
unravel it. Yeah. And having those simple decisions sooner open better options later. You'll be like, okay, I understand this. Maybe now I have a good grasp and a good understanding of this. Maybe I can adapt to that other opportunity.
You know, this actually reminds me of a story I heard online, which was about a guy who went into day trading, and he made millions but lost it very quickly because he rushed. He didn't have any experience in the understanding the stock market, and he went straight into day trading. I thought he was doing really well, was over leveraging because he was didn't have stable investments, and then lost it all and ended up in more debt. So it's kind of like, that's why there is a reason why people start smaller and then before running.
Yeah. And just to make it really clear, the main takeaway, if you're going to take away anything from this, is your first property's job isn't to make you rich, it's to make you capable.
Yeah.
So to close this episode, here's some questions we'd love for you to ask yourself, or send us your answers, what they mean for you. So before you make a decision, which option feels calmer, not scrappy?
Yeah.
And what can you realistically do this year, 2026? Are you trying to perfect your plan, or are you just avoiding starting?
So really the real game is staying in it long enough to build wealth.
And you're not going to get a reward for taking the biggest first step. The real reward is, just staying in it and applying your knowledge to take to the next investment opportunity. On that note, Ruth and I are actually working really hard behind the scenes to upgrade, working on upgrading our beginner's roadmap course, which is actually being totally renamed. Stay tuned for the new name. And it's going to incorporate this decision matrix for you so that it helps take away the pressure of making those choices based on what type of property you should be investing in now at your life stage.
Yeah.
So if you are interested in progressing your financial literacy and learning how to invest in property, because whether you like it or not, it's going to be one of the biggest financial decisions you make in your life, join the waitlist. We'll put it in the show notes below. And let us know what your thoughts are. Have you invested in something bigger than you could manage and had to dial it back down, or are you still in the process of figuring out where do you begin, what kind of strategies it works for you? Send us a DM. We'd love to know your thoughts. Thanks for listening, everyone. We'll see you in the next episode.
Bye.